We thank you for joining us. Welcome to Business Incorporated. We're live from Lagos, Nigeria's financial capital. I am Bosin Omofaye. Now let's get the show started. UK Prime Minister Theresa May has sent divorce papers to the EU President in Brussels. Meantime, European Union regulators knocks off London Stock Exchange and Deutsche Börse planned corporate wedlock. Plus, German Chancellor Angela Merkel meets Germany's Council of Economic Experts. This is what the next 30 minutes of the show looks like. And we start from South Africa, on the continent, where the Finance Minister, Pravin Gordhan, says he's still the Finance Minister in response to a question as he attended a court hearing Tuesday on a case he has brought against the Gupta brothers. Gordhan flew back to South Africa early Tuesday, obeying an abrupt recall by President Jacob Zuma from an investment roadshow overseas amid reports that he was about to be laid off.
The president is my boss, so if he asks us to come back, we must come back. Yesterday we met about 50 odd investors who buy our bonds, which means they buy our debt, and who have great faith in our economy. We also met the ratings agencies, two of them face-to-face and one through a teleconference, and gave them assurances about the economy.
I think the effect of the current Minister of Finance being sacked would be extremely serious for the country and for its economy as a whole, because it would be seen as a sign of the capture of the national treasury by forces that are closely aligned to the president, who are keen to get their hands on the funds in national treasury.
In the meantime, South Africa's currency, the rand, weakened almost 0.2% against the US dollar, and the bonds also softens today as expectations rise that President Zuma will sack the Finance Minister Pravin Gordhan following the funeral of anti-apartheid icon Ahmed Kathrada later in the day. However, the equity market was looking good. At intraday, the JSE social index was about 0.12%. Reading 52,371 in Nigeria. You can see the market there trading water slightly high, little above high, 0.5%. The Egyptian market about 0.2%, holding that green figures around 13,000 as President Morsi is scheduled to head to Washington in a few weeks' time to meet with President Donald Trump. And the Kenyan market finished Thursday 0.1% in the green, as we see some latest earnings from some of the big banks, including the Equity Bank of Kenya. Now, a flow of private equity investments into Nigeria are currently being noticed into the manufacturing sector as Africa's largest economy struggles with capital inflows that have slumped nearly 2 years in a row. Last week, a French pharma company, BioGaron, announced a takeover of all the local drug-making operations of Suiva, doing a record sale of 4 billion naira, or estimated 20 million euros as of 2012. On Wednesday, news reports say a private equity firm with interest in agriculture and technology called 8 Miles has acquired a minority equity worth $80 million in a local biscuit maker, Biloxi Industries. The biscuit maker CEO, Mr. Obi Ezeude, says the company looks to expand its production line from the present 5 to about 10 and increase annual capacity to 100,000 metric tons of the Biloxi cream crackers. Cross over to the Middle East, and you see a small rebound in crude oil prices towards $52 a barrel, helping lifting Saudi Arabia's stock index at intraday. And overnight, the Saudi Aramco is going for a sukuk of about $10 billion and a new sovereign wealth fund from the Saudi government targeting investors from Jordan. The Saudi index added about 0.4% in the first 40 minutes of Wednesday trading day, as almost 4/5 of the listed petrochemical producers advanced their prices. At intraday Wednesday, the stock was trading about 0.75% in the north. Dubai's index was flat in very thin trade. The only listed Gulf exchange, Dubai Financial Markets, fell about 1%. In Abu Dhabi, Alda Properties dropped 5.8% as the largest listed real estate developer went ex-dividend, dragging the market index about 0.84% to the south. Qatar was down 0.87%. Let's go to Europe, where the biggest story is the UK Prime Minister Theresa May has since kicked off the Article 50 triggering the UK's divorce from the European Union. That's the much anticipated Brexit. Now let's cross over and join this global conversation alongside other global news channels at this time with our Frankfurt Stock Exchange, where my colleague Conrad Burson of DWTV is joining me now. Conrad, it's good to see you. A historic day for the UK and the EU. After 30 years, it's now exit time. The Prime Minister has delivered the Article 50 Brexit letters. She has also spoken at the House of Commons in London. That's what we have watched over the last 1 hour. How much of what's in that letter do we know from now? Does the market know, and moving forward?
Well, you know, the market reaction here was not really clear in terms of pricing. German shares are slightly higher, British shares are slightly lower. The British pound went on a bit of a way downwards already last night, shortly after the Scottish Parliament decided that it wants another vote for independence. Quite obviously, this market reaction shows that Brexit is expected to cost the British taxpayers money. The public debt of the UK is expected to be £100 billion more after Brexit than it was before the Brexit vote, which means that eventually the government in London will have to tighten fiscal policies, which sure will have an effect on the standard of living in the UK, on prosperity in the UK. So the forecast is that people in Britain get to feel Brexit negatively.
Well, is it surprising to you, Conrad, and the rest of your team in Frankfurt, that the EU regulators, within that same time space, the last 24 hours, blocked the $21 billion British pounds wedlock between the London Stock Exchange and the German Deutsche Börse? Is this Brexit already unfolding in some unsettling manner between UK and Brussels?
Absolutely. Most people here at the exchange or in Frankfurt's financial community are convinced that had the UK not left the European Union, this merger